day. Ira Epstein with your SPDR ETF wrap-up, and this wrap-up is for Tuesday, the 4th of January, 2022, 5:50 p.m. Central Time. Did Santa Claus leave? Is he going back to the North Pole? Could be. When you take a look at some of the stock indices today, especially if you saw the QQQ, I think I've got it right here, that got hit pretty darn good. You didn't go anywhere in the Russell today. It's been just drifting right here. The Dow went for new stellar highs and the S&P stumbled. So I don't know, but I think it changed Santa his trajectory and he's getting ready to leave us. That could be the case. Now, you also saw some profit-taking hit in Amazon. I mentioned yesterday Amazon. I mentioned this morning to my paid subscribers. I said, folks, the month of January is terrible for shopping. It's a return month, not a new purchase month often. I know this because my wife has been with retailing for most of her life, and that's what she goes through. And it's part of what the game is. Traditionally, it's a game of sales, but there's not enough inventory to get these phenomenal sales. So that means the companies do get hit on that, so I'm not surprised. Omicron still doing in other parts you got to look at. Tesla down a little bit. ARK still big trouble. It has gone nowhere. Okay. When I look at Apple, you can see how the chart is done. It's certainly bullish, and wasn't the news yesterday the first $3 trillion company? Well, that's almost a kiss of death. You're into an area of some upper resistance. The trend is up, as you can see. Support's back at the 18-day average. But what I don't like is if you start getting under 177.26, it won't take much to close under that 18-day average. A little bit of scary could happen there if that should develop. That does not mean I'm bearish. I am to the point where I told people in my updates, and I said it here, that I think the pros are taking money off the table at the upper Bollinger Band because you're overbought, and that's, if you take my enhanced Bollinger Band course, it teaches you how to pay attention to that. You've got to find the natural target, know when you take a whole position off or a partial. I cover that in detail in that course. And that means I'm going to stop right here, and I'm not going to leave you. But I am going to tell you that this Thursday, at 12:15 p.m., I'm going to open my webinar, live webinar with me. It starts at 12:30. If you haven't got an invite, you're going to take your cursor. You can even do it right now. Move it up to practice. Move it at the top of this graph. And what's going to happen at the top? You're going to see an icon appear. Move over, click it, and that's where you fill out all the information. We'll return your invite with your user ID, which we do change each meeting. And there's an area within there that if you have a question for me, click on my email address, write me the question, give me the opportunity to prepare the charts. The webinar lasts 20 minutes, and I'm pretty tight with that. We start at 12:30 on the head. We end at 12:50. I do not publish this anywhere. I get people that write me all the time. Will you? Can you? Will you send it to me? No. A flat no. Either make the time to visit it or you don't get it. It's really that simple. It's free. I'm the one putting out the effort. You do the other half. I think you'll have a ball with it. It's fast moving and I answer a lot of questions. Okay. So XLF is trying to break out to the upside. Oh, gee, KBW, all these others, why wouldn't they? Interest rates have moved higher. So that's the thing that the banking sector wants. The higher the rate, the more they take in. They can pay out a little more money. They'll take in more money, but they charge more for the loans. You know that. Disney, fighting a battle at the upper Bollinger Band. Is it embedded? Well, in order to embed, you got to spend at least 3 days over the slow stochastic with my settings, not yours. Become a paid subscriber. I will give you my settings. Is that fair enough? Don't be one. You won't get them. My settings will differ from what George Lane set up as his for a different reason. I ran it by George. It's just like Bollinger Bands. Do you think John Bollinger just uses the original settings? He uses some different ones. Write the man. He'll explain it to you. I do the same. You can make it a little bit better by tweaking sometime. The original concept's phenomenal, but George never got to the point of slow stochastics embedding. I did. And once I showed it to him, and I taught it to him, I got from George the character, great beard, looked like Santa Claus talking to you with all this Mexican, I'm talking New Mexico jewelry, fabulous turquoise. He loved that. Dressed cowboy boots, character. And what would happen is I showed him, I said, George, I'm seeing something that's over and over and over. And it's learning how to deal with this. And I showed him some of my variations on his own numbers. He said, he thought, youngster, I think you're on to something. Okay, I was younger in those times. But you're embedded, but you never buy the way I teach you trading over an upper Bollinger Band. You're taking money off the table at that. If you're embedded, you're buying. Are you on the verge of losing it? Oh, yeah. What do you want to do with your position? It might be time to say, have a great cruise, Walt. Enjoy the boat. See you later. And step away for a little bit. In FB, okay, we're in a resistance area. You got up to your Bollinger Band top in an overbought market. The pros came out. That's what I think. Now the battleground, I said, if we come to yesterday, forget today. This is what it was doing. I said, if it works down from here, the 18-day average is likely to be the area that it tries to target for support. Resistance now becomes not the upper Bollinger Band again. First, it's going to become the 200-day average with support at the 100-day average in green with support at the 200 and the 18. You went up today, you hit everything. To make a long story short, here's what you got to be careful of now. Until you get back over this high, with momentum down and the trend down and prices closing today just barely over the 18-day average, if you have a down day tomorrow, you could be setting up a move to 324.83. If you take out today's high, that's an outside day down, the odds are you set up a bear trap and you immediately give a pop to 336.53, the upper Bollinger Band. Here is exactly that trap that I'm talking about yesterday. You have an outside day down. Do you know what an outside day is? That's when you take out the previous day's high and low and you close lower. For an outside day down, outside day up, take out the previous day's high, low, and close higher on the day. Okay, so you close down. If you take out that high, mine, is that you're going to make a run right away to the closest of the upper Bollinger Band or a major moving average above the market, and I'd be wrong in that analysis if you made a lower, if you got back under that day's low, came back through it. That's what you did. That was the bear trap. I laid this out this morning in my paid subscriber video before it ever got up to that price. Said, folks, this is where you're at. Probably going to make its run. Okay, we set up an outside day down today in the S&P, the semiconductor portion. So you're out of your uptrend, you're overbought. I think the pros are coming out. I think they're saying, okay, time to go away. That's why I'm wondering if Santa didn't change gear. Reindeers, turn around. We got to go back home. Higher high, lower low in this market, you're out of any form of a trend. Home builders, fighting a battle against rising interest rates, but the trend is still very much to the upside. You have higher lows and higher highs. The negative is that you're overbought as can be. I don't think you're attracting new buying money there. I'm not saying they're going short yet. I will say if you get under yesterday's low, and that's right through here, of 83.50, and you just come through that, I think the bears will come out and go, I'm with you. And I think they'll try to drive the market down there. Then we get to the energy sector, which is trying to break out of this sideways action. This is overall bullish sideways action. Will it hold? In order to get an upside breakout, I need a market to do just what it did today, but again do it tomorrow. In other words, make a higher high, close in the very top part of the day's range. 2 days in a row would give me an upside breakout. It's rare that you get them. When we come to the emerging markets, you're overbought. You've come back to the 18-day average. And remember what I told you. When you first got it back here, I say these in these videos, and I pretty well remember what I said. I said, okay, now you've gotten out of a bear market. You've negated it. Wouldn't surprise me if you're going to fight at that 18-day average. That's exactly what I think is going on. Market's trying to figure out what next. Temporarily, the bulls have control in the sense of higher lows, higher highs, and the bias up since you're over the 18-day average, but you're also very overbought. In the gold market, I think yesterday and today, the pros stepped in. First of all, yesterday, retest of the 200 and the 18-day average with the pattern where you've already had higher low, higher high, hit the upper Bollinger Band. But where's the big negative? Remember what I said, watch out here. If you now have a reading at 79, the odds are you're not going to stay embedded the next day. Believe it or not, you rescued yourself. Instead of it closing, and it took it to close right on the high of the day, you only got it to 79.39, but you rescued it. It takes a reading under 79 for me to say it's losing its embedded reading. I don't think it's a buy at these numbers. I want to go on record. I need that momentum to get even stronger than that, but it certainly was an interesting day. Mining stocks I like. I like them a lot. I like them like I do the semiconductors. And yes, there's going to be breaks along the line, but you're getting this 18-day average just slicing through everything. And in the process, it's a major transition, watershed event. What's he talking about, right? The 18 just got over the 200-day average. The 200 is under the 100, and you're just about to see the 18-day cross the 100. Bullish market has the shortest term average over the medium term over the longer term. 18, then over 100, over 200. That's pretty strong stuff. On the way down, big support area if that happens. Copper's in a major resistance point, but it's embedded. This is a bull market that set up a trap. Take a look at the trap. Outside day down. What did I just tell you? If you take out the high of an outside day down, I look to see the closest main moving average or a Bollinger Band, and I think the market will go to the closest one of that right away. It's called a bear trap. TLT, breakouts. Or is it? Now, this isn't a classic breakout. You're under, you're at the very low of the day, okay. But the day, even though you close lower today, you're not at the very low of the day. You're not in that bottom part of it. So yeah, breaking down. I can see that the market's now 2 days under the lower Bollinger Band, oversold. I think there's also going to be a bearish crossover develop. Today's Tuesday, could be by Monday of next week, if not sooner, where the 18 gets under the 100. I think you're in a bear pattern. It's that simple. And last, the euro currency just caught in this sideways action. Overall, it looks to me like it wants to work lower. But when you're in a narrow band like that, you know what I do? I shake it off and say, adios. Take your cursor, move it to the top, get your invite, do what you need, write me the questions, and I'll see you on Thursday. I'll open the chat room up, by the way, the webinar at 12:15. I start sharply, 12:30 p.m. Central Time. Take care.